So understanding top-down analysis would be probably the best thing you do for your trading career. One of the key ingredients to a profitable trading system is having a solid top-down analysis. It should be a repeatable, mechanical, reliable approach you have to get to the markets and chop the market down from the higher time frame to the smaller time frame. Now, if you are a certain type of trader, such as a scalper or intraday trader, you don't really need to start on a monthly chart. Like you can start on a weekly chart just to get a barometer of things, but you're more than likely are not going to be taking trades based off a weekly chart. It's good to find the structure points, which we can go ahead here and plot. We know this high here was violated, so this gives us a higher low here on the weekly chart. This would be the only thing I have on this chart because this is just a weekly chart and I'm an intraday trader and a scalper. I'm not about to take a trade off any type of zone or placement here. I just want to know where is it going weekly, long term, okay? Next, we go down to the daily chart. Now, as you see the daily chart, we start to see a little more details. We can see that I have that same structure point would be my structure here, higher on the daily chart. And that's all I'm really looking for. And I'm expecting the market to at least attack here, which is the all-time high on gold. The next thing I want to do is I want to go down to the 4-hour chart because there's nothing left for me to see on gold on the daily chart except let's look at the 4-hour chart. So before we move down, I want y'all to understand that this whole entire push, when you understand structure, this is the bullish structure push on the daily chart. So we're going to keep this on a chart so you can understand and see that we are using every single time frame because they all correlate. So let's go ahead and move down. So on a 4-hour chart, we can now see that this bullish structure was just that bullish impulse on a daily chart. And now we can see that we are trading inside of a structure. Now, the next thing I want to see, if I was coming into this market, I would want to see when does the market realign with the higher time frames. If the weekly is telling me bullish and the daily is telling me bullish, and I'm at the 4-hour chart. So I understand that on this time frame, this was the bullish push, and then we started to get a move downwards, which is here. This would be the retracement of the daily chart or the higher time frame. So I understand that this move here bearish was a retracement on the higher time frame. However, on the smaller time frames, we can see pretty obvious that this is structured and we could have traded that and participated in the market. So I'll delete that. Now, understanding that the higher time frames is bullish, the next thing I want to do is see when does the market like and wants to switch and go back bullish. And as you can see here, we're just going to pinpoint this now. The market did give a strong bullish push here and it broke this level here. That would tell me that, hey, the market wants to go bullish again. So in this area would be an area where I'll be looking to buy the market. Why would I want to buy the market? Because if the market is higher time frame, weekly, daily, bullish, then that means to me, once the 4-hour and the 1-hour charts and lower time frames start to align, that's going to be a strong push to the upside because the 4-hour is now agreeing with the higher time frames. So I want you to think about the market as a family tree. The 4-hour time frame is like the middle. It's the young OGs. The elders are the daily and the weekly and the monthly. And then everything else is the 1 hour, 30 minutes or below. Those are the kids who do whatever they want to do until eventually they fall in line to what their parents say because they realize, hey, my parents were right. Okay. But sometimes the kids are right. And we'll talk about that later. So now we get to the bullish structure push. And inside of here, I would already understand that, hey, the market wants to go bullish. So once I see that break, I want to say looking for some type of retracement. I will have this key level on my chart potentially here. Now this key level will tell me, hey, I'm expecting the market to come down here before going back bullish. But I also will know that, well, I have a liquidity area here as well. So liquidity areas and zones, for supply and demand zones, priority zones, areas of interest, whatever somebody wants to call them, are areas that could potentially reverse price and send it back bullish in retracements or start them. So let's just go ahead and mark up so we can see current structure so we can see how price action aligns. I have a 4-hour chart here, higher low, I have a higher low here as well. Higher low here as well. And now this is current price. And I am expecting price to go here on gold, 3,505, looking to break this all-time high here because we are in uncertain times in the world right now. And when that happens, gold is seen as a safe haven asset to mitigate chaos that goes on. So now on the 1-hour chart, you can see that the market went bullish here, just ended that retracement, and you see strong bullish push. This is obviously a strong bullish push right here. Strong bullish structure push. You have another strong bullish structure push, making a new high. Another strong bullish structure push. And it continues and so on and so forth until we get to, let's fast forward to today. So understand the structure. We understand the basic principles is that markets going higher wants to go bullish structure push, retracement, bullish structure push, retracement, bullish structure push. And then when the market does this, it usually comes down to what? Inside of these bullish structure pushes, the market leaves a key level that will be a level that pushes the market up, usually. Now, when the market ends up breaking this here, and you probably took a trade and lose, it's okay. It's just a key sign that the market is about to start to consolidate or that the market is going to go the opposite direction. So if we look here on today's price action, you coming in here to today, you see you have a strong bullish push. Higher on the 30-minute, we have a strong bullish push, and it comes back here. And then now we have this key level, right? Now, I would like to take a trade in this zone because I believe market is going to go bullish. Why? Because the weekly told me it was, the daily told me it was, and the 4-hour told me it was, right? So I'm going to go ahead, put my stop below the zone, and then I will target higher levels. More than likely, I would actually target this level here, right, and get a 15R. But as a trader, you want to make sure you're getting at least 1 hour per trade, 2 hour per trade, and etc. Now, if you go on to the 15-minute chart, we begin to see more details, okay? We start to see that, hey, it was more structure in that push. So now we see a bullish push here and a retracement. Let's move this over here. Now you got another trading opportunity off that zone. But right now, we are seeing these bullish structure pushes, and this is between 5 a.m. and 11 a.m., right? We see these bullish structure pushes that are occurring. This bullish structure push here is 2.25R. This bullish structure here is 2.75R, which will give you a total of plus 5R if you just took those moves there. But what I want to point out to you, something about gold, right? So if you go back here to the weekly chart, we can see that gold has been bullish since the chart showing us 1975. So this lets us know that gold has a bullish nature. It's normal for gold to be going up. It's an appreciating asset over time typically. So when we go back to our chart on the 15-minute or the 30-minute in which we enter these trades, we can expect the market to go up. Why? Because gold has a bullish nature, which is the underlying characteristic of gold. But not only that, the 4-hour and the daily aligned, and we expect the daily to what? Hit those higher time frame targets. So what I want you to do is understand that here is plus 5R. If we just took those trades right there, and how do we get plus 5R? Well, we got 2.25R here, and we got 2.75R here, which gives us 2.75 plus 25 gives us 3, plus the other 2, that gives us 5R total. Now, remember, earlier I told you that we should go all the way up here. Now, if these two hit, it was 15R, right? That would be 15R, 15.7 here, and 19.75 here. So let's watch and see if these actually play out. We'll watch this on the 1 hour time frame. Zooming in. What we can see is that, okay, if we held this, the market started retracing, then the market shot up, right? Huge bullish push. That huge bullish push also ended up being what? Structure. Because the market should continue to make bullish structure. If it's going to get to this level here, like we said it was, based off the analysis, based off the daily chart, the market should continue bullish. Look at the 4-hour chart. There was nothing to the left stopping it, but remember this liquidity level or this cash heavy area here that I said, it had passed that, and the only thing left is this level here. Now it should hit that, and you can see that we also see just continuous bullish structure. Why? Because the market wants to go bullish because that's its nature, right? It's been long-term bullish. We got certain uncertain times with wars and things of that nature, and the only way it's going to go bullish is if it has bullish structure, right? Pretty simple. So we go back to the 15-minute chart, and let's just go here. Okay, so the target was hit. Target was achieved, right? So if you took both of these trades, not only did you get plus 5R, of course, you've smacked the market, but what you actually would have ended up getting was 15R plus 19R. So this is over 30R you would have got easily, 35R. That's a powerful move, right? All because you understood top-down analysis. And we can break it down even further, but I want to just put this in perspective with prop firms for you. Now, a prop firm won't allow you to do this. If you risk on a prop firm, now we just saw what happened if you held, but with a prop firm, a lot of time you can't hold, and they're not going to let you pass as far as the consistency rule. It's just too much. You did 30R in a day. It's insane. You only need, based off your risk, 6R to pass a prop firm, right? So if you risk $500 per trade, that's 500 plus 500 is 1,000, 1,500, 2,000, 2,500, and then you have 3,000, which makes you pass the prop firm if you're risking 500 per trade. Now, these two trades alone would have put you at 5R, which means in one day you could have actually what? passed the prop firm challenge or been close. And we already know here, if you put this at 2.5, let's just go for the sake of it. For the, just sake of the video, it already was over. That's 3R here, and this one did not go 3R. It went about 275. So you see, I'm just playing with these here, but you still are close to passing the prop firm in one day. Now, if you begin to risk $400 per trade in the prop firm, that will put you at $400 times 7.5, and that will give you 3K, meaning you need 7.5 R. So you want to make sure you have a repeatable, reliable mechanical system that you don't have to think about. You know how to do your analysis, you know the process for your analysis, you know how to get to your entry, and you know your exact entry you're looking for. You need a repeatable, reliable mechanical trading system, a system you can trust, which is one that I've built, which is called the IPE system. Now, this trade right here, if you did hold, it took a little over 24 hours. If you had private capital, which I always am big on, hey, private capital is very important. Get your money from the props, trade private. There are huge traders like me. I love to trade private capital, right? You can trade private capital and don't need prop. You can trade prop and then pour it into your private capital. You can trade them both. There's no, way to do it, but prop is probably the best way and the most fastest way to get out of a situation when you have some type of monetary, stress once you get the skill set. So look, man, if you like my content, like, comment, share, and subscribe. We're going to put out real trader content on this channel, and join me on this journey to mind muscle millions, man. If you're trying to get your mind right, trying to get those muscles, you got to be in the gym. You know you got to be in the gym if you get into the money, and we're going to focus on the millions as well. So mind muscle millions, God first.